Hi everyone, this is Rob Roy of Elliott Options and welcome to TradeFinder Live. With that said, let's go ahead and take a look at the chart of the market. So here's the S&P, and commented on this last night. We had this little gap up. So the market has been finding resistance area right where the previous wave 3 was, and utilizing the Zigzag tool. You've seen this last few times that we had this wave 3 move right to the 61.8% fib level and then bounce down to the previous fib level, but also where we were with the previous wave 3 high. So the 61.8% fib extension was acting as resistance. The previous wave 3 high was acting as support along with that 50% extension level. So we went back and forth through there for a couple of weeks. And then yesterday we broke to the upside there, little tiny gap. Thought that might get filled today. Looked like it on the open, opened slightly lower. That didn't last very long and then closed higher. Note that far less volatility over the last couple of days to start this week. Yesterday and today, volatility has gone down significantly. The VIX still above 20 though, at 23, but pretty interesting that we look to be finally ready to make that march to the upside. Another thing that I wanted to show you is one of our favored confirming indicators is the DMI, and it's starting to get pretty darn interesting. Now we've seen this ADX starting to move to the upside. It's breaking above 15. That causes it to show up on my search when you see the ADX breaking above 15, breaking above 20 if you were in the trade scan series. All of our education, by the way, is free for our subscribers on our website. We have tons of stuff. In the trade scan series, we went through all of these confirming indicators in detail, basically an entire webinar on each and every one, talking about the rules, how they work, etc. If you read just about the DMI in general, you'll see the ADX breaking above 25 as an entry level, as long as it's between the two directional indicators. You want good separation. You want a good vertical cross, et cetera, et cetera. But breaking above 20 is a level that I utilize. It's slightly more aggressive, but it's just been such a small number of times when I've seen the ADX following all the rules, breaking above 20 before breaking above 25. Again, all the other rules being followed where it didn't go ahead and break above 25. So it's slightly more aggressive, and I want to make sure that I emphasize that, but I've just found it to be worth it as far as getting you in just a little bit sooner. Aside from that, I've changed the settings from 14, some use 20, 1420 to 1321. These are fib numbers. So with the 13 periods here instead of 14, that's slightly faster. So when we have that number being just a little less, meaning that you're going to get the result slightly faster than you would at 14. So being a little bit aggressive with the 20 counteracts that a little bit, but it also makes being the ADX breaking above 20 not quite as aggressive as it would have been due to the fact that that number is 13 instead of 14. So I hope that makes some sense to you. So looking at that, we're expecting the market to now go ahead and make those highs. And if the ADX does break above 20 in between these two levels, holy cow, we could start to look for a stronger move, maybe not stopping just at the 100% extended level. We could have a further extended C wave and make it all the way up to the 161.8% level. I think it's too early to call that yet. Again, the signal has not occurred yet, and I do always urge caution when looking at the DMI. When you look at this chart, you can easily see that, wow, the ADX is moving up. It's moving up significantly. Look, even from just a plain old making higher lows here, it's in an uptrend at a 45-degree angle, which if you've ever heard me talk at all, you know I like movements in 45-degree angles. Everything looks great. And you could say it's going to break above that 20 level and go in between those two levels. You have to wait for the signal. That I have seen where it's looked like this. It looks like we're going to have a great buy signal from the DMI telling us that the trend is strong and is going to get stronger, likely to continue, to use the specific words. And then the ADX just curls down and these two fizzle out. It has to actually break that 20 level with the separation between the two directional indicators intact. So my point is, let's not call it, hey, we're headed up and ready to go to an extended C level yet. I just wanted to point out that if the signal does come through and it does what it's supposed to, being the fact that the signal's early and we're already starting to break towards the 100% extension, you could certainly see a scenario where 161.8% is in the view. So that's where we are with the market. A little bit surprised again that we didn't fill that little gap, but it did hold. Notice on the low, it held the 61% level. I think that's important. So this basically counts as, and I know it's, if I spread the chart out, it looks a little bit better, but this counts as a break because we broke above this 61.8% fib resistance level. And then today counts as a confirmation day. So we have confirmation that we've broken above 61.8, and that means that the next likely move for this C wave and the wave 5 is this 100% extension. So let's not forget that we're in a wave 5 as well. I know I focus a lot of attention on the zigzags because I really love to trade the zigzags. I don't think they're taught enough. I don't think enough people focus on them. I don't think enough people focus on all of the corrective patterns, flats, zigzags, and triangles. But let's not forget the basis of Elliott wave here, which is a 5-wave pattern, and we're in the wave 5 too. So the wave 5 is moving higher, the C wave of the zigzag is moving higher, and people that are new may question, well, why did you start the zigzag there? Well, this was a zigzag here as well. It completed. And then this was the test of the previous fib level and started a new impulse. So all of this was absolutely classic zigzag Elliott wave movement. So that's why that starts, that's the 0 point or the start of the A wave, is because we completed the zigzag here and then we came down, look, we tested it, completed it, tested the previous fib level. I mean, this is textbook. All this is, you couldn't script out something more textbook for Elliott wave with the market on where it is now. Now we'll see if the wave 5 and the C wave do continue up as expected to the 100% level. It's the only thing left, really. I did want to show you one other thing because a little frustrated with this. Taking a look at the futures chains, talked about this in the last recording as far as the dollar and the Federal Reserve and all that stuff. But when you take a look at this chart and we turn Elliott wave on, in the recording, the last YouTube recording, we'd come down and we'd hit that wave 5 dead smack in the middle. This is the tap box time and price projection. And look, we came all the way on down to the 100% extension level there. And we were talking about how the weakening dollar has boosted silver and gold. And I wanted to show you a chart of SLV, which had a huge move to the upside today. I'm going to come back to this chart here in a second, but look at that. So over 6.5% move up in SLV today. I was hoping that we would get a little bit more of a correction out of that. In other words, I was looking for, and this kind of concerns me a little bit, I was looking for a little bit more of a corrective move out of the dollar, which then would have brought the metals back down a little bit. And here's something that's quite interesting. So using this this new triangle tool, you can see with this triangle, if you have any difficulty drawing triangles, that new tool does everything for you. Again, you can go to ProfitSource.com if you're not familiar with the software and wanted to find out more about it. So there was the triangle, then you get a breakout. So that starts a new impulse pattern. So another one of the cool new tools is the zigzag tool. So that's clearly an A wave impulse coming out of the triangle breakout. And look, we got a 50% corrective move. So our target price is 100 and we've already broken that. Look, and we've broken that and we came back and tested that. Now we're looking to come down here. The next fib level is 138.2. And then we could extend all the way down to 161.8% on the dollar. If that happens quickly, then this pullback that I was looking for another entry on silver is going to be too late. I'm going to have to wait for the next pullback. So I'm still hoping that we'll see this bounce back to the upside. And if you're wondering, well, what target are you looking for? Well, look at all this right through here. So we've got this fib extension level. We've got the previous wave 3. We've got 2 points here on the D's contract that found support before bouncing up into this triangle. So that's what I was looking for. That made an awful lot of sense from a general technical standpoint. That's not Elliott wave stuff. That's just, you know, a bounce back. You break a support level, you bounce back and test it. And so far, yesterday looked great. Yesterday looked perfect. All right, we're on our way back up to test this level. And today the dollar said, yeah, no, we still are looking at all this. And I could have had something to do with the stimulus talks in Washington gaining steam. Now they're talking about, you know, the last round of stimulus was a $1,200 check to everyone. And the forecasting, the commentary they're talking about today was increasing that, so that the next round of stimulus checks is going to be even higher. Now they're still arguing over how much to give in unemployment, and with you getting both federal and state unemployment, they've been going back and forth about what that benefit should be. But it had always been kind of, I thought, understood that the stimulus check, the one-time check, was going to be another $1,200, but there's a potential chance of that being higher this round. That may have been enough to send the dollar back down. Who knows? But I am still surprised that we didn't come back and test that level. I still think we will. And if I have to wait for that, for the entry, we're certainly not going to chase that move in silver. We put the 10-day moving average on. You can see it's a little overbought short term, but not a great deal. So another move higher tomorrow wouldn't be that shocking out of silver. When we put the Elliott wave pattern on, you can see we're in a wave 3. Here's the reason that I wanted the entry, is because we're eventually coming up here likely to this wave 5 target. They're around 28. So there's still plenty of movement to go. We're only at 24, so 4 points is big, but holy cow, you can't chase that kind of a move, even if it continues up. And we'll just wait for the corrective move and be prudent on the entry. You have to stay patient and follow your disciplines, even if it looks like maybe a trade's running away from you. Well, you know what? There's 4,000 to 5,000 other optionable stocks out there that we can still trade. If one runs away and we miss it, fine. Chasing trades is never a way to be successful over long periods of time. But I did want to share that with you and be open with, man, may have missed the entry, but we'll see how things play out. GLD did not have the day that silver did, and this is why I've been harping so much, and people have criticized that on YouTube, that saying it was a mistake to use SLV instead of GLD. I just completely disagree, and this is why. That looks like a pretty nice move in gold today, doesn't it? It's 2%. That's a 2% move, whereas in silver, it was a 6.5% move. So there you go. There's the reason why. And we can argue the variables of what's included in the SLV versus the GLD, et cetera. But so that's the market. And we did close a couple of case studies out this week. So I wanted to share those details with you. The first one is on FBHS. And you can see that was in our impulse strategy. So that was a directional trade, just a straight call, but it returned nearly 55% in 2 days. Those are fun. It's nice when the timing works out that way. You can see that we've talked about this dot plot that we have, where it gives you the daily mark to market on each individual position. So it shows you that the trade was a tiny bit of a loss for a short period of time, but not very long, obviously. But that's the nature of going long options, isn't it? Time decay is an issue. We've talked about the out of the money butterflies, the positives of the time decay aspect of those offsetting time decay, but options by nature, when you're buying options, time decay trades very likely start to to move against you as far as profit loss until you get the move you're making, in this case, the directional move. So the entry signal went out on July 27th, and it's a good example for those of you that are new on what the alerts look like that our subscribers enjoy on our website. We have all this information here, so you get the entry, the date, what the fill price was, then we confirm here. So these are not just prices that are necessarily sent out with the alerts. We make sure that that there's confirmed fill prices so that we know those are legit and those actually happen. So again, that's not just speculative pricing. We know those were actual fill prices. And then we also include the chart along with some reasoning behind it of why we got in. And this is just Elliott wave all over the place when you look at this chart of FBHS. So you can see here in the wave 3, and this goes to exactly why I talk about why say don't trade the wave 3 for the people that teach wait for 1, 2, 3, and 4 to be in place and trade that move from the 4 to the 5. You're missing out on the strongest wave, and you can see that we had an extended C wave in this zigzag here. Right there's the 161.8% level, the same where the arrow is that says completed zigzag. You can see to the right that was 161.8% extension. So this one just blew right through the 100% level, basically gapped up and closed above it in one day. So we went up to that level, came back down. There's the test again, and that's a corrective move in the larger zigzag. So that move from 2 to 3, which was a fully completed zigzag pattern, actually was a complex A in a larger zigzag pattern where the C wave extension target is 61.8 based on the corrective move. So roughly around $76 was our target price where we were looking for this to go. And not to forget that all of this zigzag stuff is going on within a larger 5-wave Elliott wave pattern. So again, perfect explanation of degrees within a 5-wave pattern where these corrective patterns break down, and you can find them waves within waves, patterns within waves, patterns within patterns, however you want to view it. And then last but not least, we go down and look, and there is a really good signal out of our DMI. So there's that ADX breaking above 20, good separation between the two directional indicators. So all signs point to that move was going to continue, and it did. And so then just 2 days later on the 30th, so technically 3 days, but the exit was before the entry time of that day. So it looks like 2 days, call it 3 if you want to be absolutely perfectly spot on. But there was the move right to the 61.8% level. We're watching this. Let it trade above it, but then when it showed that it was going to start to move back down, we're getting a little bit overbought with the 10-day moving average here. You can see how we went from a 45-degree angle to a more vertical move. Those made me nervous as well. The 45 degrees, it tend more to hang in there longer with those. But when we start to move vertical, that's a little bit of panic buying coming in, and vertical moves have sharper corrections than the 45-degree angles do. So with all that, plus the fact that our target price was hit, that was the trading plan to start with, you close it out. When when the plan goes exactly as you had expected, you don't second guess, you don't Monday morning quarterback, you take the profit and you move on. So that was a really nice short-term gain in FBHS. And there's one other one that we closed out that I wanted to share with you, which was on BBY. And that one was actually in the volatility strategy. This one took a little bit longer, but this is a triangle waiting for a breakout. So here you can see this huge ascending triangle that we had on BBY. As you can look and see, especially before the big move to the downside from the coronavirus, those are pretty tiny bars. This is not the most volatile stock. So you have to keep that in mind when you enter. And even the move to the upside, there's been more volatility. Those bars are bigger than they were before the big drop that occurred towards the end of February. But with even a little bit more volatility here, you have to keep in mind the history of it. And so we look for 30 to 70% is kind of the target range for these, for the triangles. And if we have one where it's maybe not the most volatile stock historically, tend to look more towards that lower end of the profit range rather than the higher end of it. Again, just experience and how long we want to wait. We were already in this one for 28 days. So at that point in time decay is becoming an issue. So it was a great time to exit this one as well. Also note on the entry that the ADX had been extremely low. Look to enter these when the ADX, especially now because there's been so many of them with the market consolidating over the last couple of months, for the ADX to drop below 13. There's been a bunch. This one went below 10 and got down to like 8, but it was starting to creep back up. So this upward move was starting to gain some strength. And so the question becomes with this chart, is this, look at all that resistance back there from the end of the year and the beginning of this year. Are we gonna have enough momentum to break through that? We had a doji at the point, so likely getting ready to make its move, and it did finally break out, exit. Here you can see the 38% return. There's the 28 days, and again, as I mentioned, here the dot plot again showing you before the breakout occurs how these by design generate loss before the breakout, and you can see clearly where the breakout is. So these dot plots are super cool. And again, it's mark to market each day. So there was the breakout move and the initial move here, and wanted to see if we were going to continue to go. Really expected with this move up here into the high 90s. Hard to imagine that it wasn't going to close and trade above 100. So we got here, and you can see the closing price at 142. That was the target, again, hitting the target price. When you have stocks that move up this far, especially when you get a big move to the upside here on earnings, and then you close at that round number of 100, that could also be a point where maybe some of the sellers come in and look to take some profits out of this move because we've hit that round number. But the expectation was, we got close over here, but it didn't close anywhere near it. So the expectation was we're going to close at or above that 100 level. We did. So another one where exactly what we were looking for occurred. So you take your profit. It's a good example of the difference between a directional win, where we generated a much greater percentage return, but with the triangles, these strangles within the volatility strategy, you're not picking direction. You don't have to get the direction right. So you're buying a call and you're buying a put. So there was the trade right there. All you're looking for is a breakout move. Well, if you're buying both sides, when the breakout occurs, one's making money, one's losing money. We have it set up so where mathematically the one making money is going to make money as fast as mathematically possible, and the other option is going to lose money as slow as mathematically possible, but they still are, one's making money, one's losing money. You can't change that part of how the trade's set up. So the percentage returns tend not to be quite as high, but again, you're taking that, you got to get the direction right out of there. Everything's risk reward. So by taking some of the risk out, or a lot of the risk out, by not having to pick direction, you lose a little bit of reward. But 30 to 70% on average is still pretty darn good. And this has been a really good performing portfolio during all of this craziness, especially since we've had this. I mean, you can go back here and make a case for we've been consolidating since all the way back here in May, because we broke up here, came back down, tested that level, came up, tested it, hit the 61.8% level, and found some more resistance areas. So we've not done a whole heck of a lot in the market basically since towards the end of June, or excuse me, May. So that's generated an awful lot of examples of our triangles, the strangles within the volatility strategy. So let's look right now. The first one we want to look at is the primary case study that we chose last week, which had a very interesting first day. Mondelez, MDLZ. And this is what I'm talking about. So here's where we were last week. And then the next day, boom, that wouldn't have been enough. Well, it depends. I guess it depends. Everybody has their own profit target. It was a 2% move in the stock, a little over $1. I'm expecting it to move back and test this recent wave 5 high, so that's the expectation. But did have a big move to the upside that first day, and that was enough, as you can see, to get us just a little bit overbought off that 10-day moving average. And so we've come back to it. A perfect example again of why I get nervous when things go vertical. The 45-degree angles I like better. When you go vertical, the corrections are harder. So we came back, corrected that overbought condition, traded below the 10-day moving average intraday, but closed back above it, traded down to it again today, but closed back above it. So that one's looking exactly like it is supposed to. The week before, we did ACN. You can see that one's just continued to motor on in the upside in the wave 3. So if you followed that one, that's another winner. Put the DMI on, starting to, yeah, you might want to think about, if you haven't already, might want to think about taking some profits here, because the ADX is broken above the positive directional indicator. You can look at the ADX and say, well, it still has plenty of room to run, because we're looking for it to get closer to that 40 level for the pure overbought signal, but it's supposed to, or needs to, stay within the 2 directional indicators as well. So the concern here is not where the ADX is, it's still moving up, which is a good thing. The concern is that the positive directional indicator actually went down today. So the ADX went up, but the positive directional indicator went down. You would have liked to have seen that move, at least move back up, even if it didn't get back above that ADX. So you could make a case for giving it another day or two to see if that positive directional indicator moves back above there or not. So when we get this close, this is when I bring the CCI in, because that's an even tighter indication of short-term overbought, oversold conditions. And it's in the area where, because if again, if you were in the trade scan series, they talking about the CCI, the historical movement of the CCI is very important. Where have the peaks been in the past, to give you, because the range is kind of large in overbought, oversold within the CCI. So how it acts on an individual stock is very important. So looking at this, you can see that, well, we're moving to the upside, and we're trading about 160 or so here, but the peaks have been above 200. So from that standpoint, you would look at that and say, okay, well, we still have potential room to move before the CCI shows us as being at least extremely overbought, a tiny bit overbought now, but not to the extreme levels where you would look for a potential reversal. So that could give you some comfort to say, okay, I'll hang in there. I'll see if this positive directional indicator turns around, if we get some more buying or whatever to come into it. It was a pretty tiny day today, pretty flat day. So that could have been part of the reason that the positive directional indicator, it's far more sensitive to shorter term movements than the ADX is. So that's looking pretty good. So, you know, over the past few, and then one that we had sent out as an alert, we looked at this one 3 or 4 weeks ago. Now, we sent this one out as an alert to our subscribers. We already took the profit in it, and you can see that it's continued to move to the upside. We closed this out for our subscribers right here when we saw this corrective move. I was watching it again intraday. That's why I watched the 3-minute charts. And this is what I do: I sit at the computer and watch 3-minute charts of all of the alerts to look for those overbought, oversold signals. And that's what you're paying for with a subscription. You off playing golf or doing whatever you want to do. I'm the one that's watching these and then sending out the signals. And it's uncanny. Even the brokers talk about it. They give me a hard time sometimes because it's like you can really pick when things are about to turn. And watching this intraday here, every time it took to the upside, there was a big bar of selling. So some player of a reasonable size, at least, was exiting. You can see that we still went to the upside from there. So not everybody got out, but somebody was. And we had a nice profit in it. So that was a signal to go ahead and close it out. It went a little higher, came back down to that level, moved up again, back to being just a bit overbought yesterday, settled that point down there. And we look at the DMI, and it's just strong. It's not getting to the point where it's significantly overbought. It's in that area. This was overbought back here in May. We're not quite there yet. It's a really solid DMI. A little movement down in the positive directional indicator because the stock went to the downside today. But in this case, we're still between the two directional indicators. So that one may still have power to the upside. And the closer we get, now 72 is not enough. But if we reach this wave 5 target here of 85, that's where you start to get in that area. Stocks that make it to 85 have a high percentage chance. It's really high. It's like near 90%. It's in the high 80 percentile of stocks to get to 85 go on to 100 because now they're in the tractor beam, as I call it. My dad was a huge Star Trek fan. And so if you've watched any of the Star Trek, the tractor beams where you get within the universe of whatever is controlling that area and it pulls you along. Well, that's kind of the way those whole numbers are, especially 100 and like a tractor beam that just pulls the stock to the upside. 72 is not high enough for it to start to move into that. But if it does reach this wave 5 target and we get up to 85, well, you can make a case then that we could still go to 100. So my point is this one bears continuing watching, which we are, to see if there's another point where we might want to take a look at another move for this to continue higher. But it's not, as you can see, it's not a whole heck of a lot further than where it was when we got out. Even though it's moved up, it's moved down. So it was just kind of trekking along for a while. Now it's getting a little choppier. And that's because we're getting a little closer towards the overbought scenario. Not quite there yet, but moving in that direction. So I wanted to share that one with you as well. I thought you'd find that interesting. So let's take a look at our current charts. By the way, you've probably been aware of this already. They've answered some questions, but support is on with us. So if you have any general questions for the support guys with the software, whatever, they're there and they may pop in from time to time. Just if you hear the voice from above and wonder who that is or what's going on, that's them. We will get to some questions at the end, but I can see that they've already answered a few of them. But let's go to the pre-computed list. And this is what our subscribers enjoy with the software is all these searches are already included in here. These are all my parameters where it says Elliott Wave options here over on the left-hand side. Those searches are based on my parameters. So you can just click on it and you can see that there's 9 impulse moves. And I already know, because I've done this class enough, that you're more interested in those. Note that the consolidating stocks is down to 226. So it's down 100 results from where it once was. And that's because the market is starting to break directionally. Throughout all this consolidation, especially through the end of May, through the month of June, we were consistently getting 300 to 320 of the consolidating stocks. And you can say, well, that's a whole bunch of them. Well, just to give you an example of an alert that we just sent out to our subscribers. Well, let me just pull it up again. Let's see if I still have this window. Yeah, let's just pull it up and I'll just show you right from the website again. newest alert on NEO right here. You can see it's already profitable in one day, 16% in one day. Can't beat that. So let's look at the entry chart and show you that here is a triangle in the wave 4. Now we focus on the triangles in the volatility strategy without the Elliott wave pattern on them. So just looking for pure triangles, take the Elliott wave off. Elliott himself said let the triangle default take precedent. But also within Elliott wave rules, quite often you find triangles in wave 4. It's a common place to find triangles. So you have a 5-wave pattern to the upside, you get a consolidating triangle in the wave 4, and that was what we had in this alert for NEO. And there's that triangle tool again, highlighting it and illustrating it for you, and you can see where the target price is. So that's the newest alert that we sent out. So what I wanted to tell you is that you could come over here and click on that, and if you wanted to do it in the wave 4 buys, now you can find patterns just like we found with NEO. And instead of having 226 results, if you wanted the triangle patterns in conjunction with the Elliott wave, then you have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So you have 14 results instead of 226, or 14 results instead of 122 of stocks that are within wave 4 patterns. Now this is traditional Elliott wave rules. That's not necessarily my rules included in there. So let's go back over here and look at the impulse stocks and see what we want to find for our case study today. In Alibaba, we already have an alert on Alibaba. Carmax, that hasn't shown up for a while. Let's see what Carmax is doing. The reason that I bring that up is I've mentioned this in some of the YouTube recordings lately too. There's been an awful lot of rotation that's occurred within the marketplace. So there's not a tremendous amount of new money coming in yet. I do think if the market makes significant new highs, that's going to draw all that retail money in that's sitting on the sidelines. But until we do that, I think we're in this churn period. So and it's fast. It's a fast churn where the money moves into areas that have been beaten down, haven't necessarily seen the same results as the market itself has. And so they're moving that money around very quickly. Let's see. I just haven't seen Carmax on the list. Maybe it has been moving up, but let's see. Yeah, see, it hasn't been enjoying quite the move as the rest of the market has. So this could be quite interesting as far as a potential rotation. Had a pretty decent day today, as you can see. So we turn the Elliott wave pattern on, and well, it's pretty clear what we need here, isn't it? It tried to trade, it did trade above 100, and there's that 100 level that I was talking about. Look, here's the tractor beam kicking in right here. Just draws it on up there, and then it got close, and he's like, no, yeah, we got, well, no, yep, all right, now we can trade all the way up and close right there. So it hit it on its high multiple times before we finally got the close. And based on the 5-wave pattern, we're not done yet. We have a qualified wave 5 and not a completed one yet. We still have a move to the upside still to go. And that looks like a zigzag there pretty clearly. Let's see if that, and with a doji right there, 69%. So that one would have stayed away from that, even though it did go ahead and work. Elliott was 1 percentage point away from saying don't trade that one. His number is 70%. So you got within 0.9% of that being disqualified. According to Elliott, that would have probably been too far for me, honestly. But it did go through and do what it was supposed to do. And so here's the test back. And then it looks like a new impulse starts here. So let's see. And we're at the 50. So look at that. That makes an awful lot of sense, doesn't it? We're right here at the 50% extension along with all of this resistance. If we break above that, check that out. Look where that C wave extension is. Dead at where the wave 5 is, where the wave 5 target is. So what this means is, again, you have two completely different Elliott wave patterns. We have a corrective zigzag that started midway through the wave 3, giving us the same price target as the overall 5-wave pattern does. So we have a corrective zigzag and the 5-wave impulse pattern giving us roughly the same target, right around 115 as a potential move for Carmax. So let's look at the DMI. I think looked pretty good. And see, now notice the difference between, remember I was talking about rotation? Look at the difference in the positive directional indicator on this chart versus the other ones that we've looked at where the positive directional indicators move to the downside. Here, the positive directional indicator is moving up. Look at that nice tick up with the ADX. That sure looks like we are going to blow through this level. Now, you could certainly make a case for, if this does open to the upside tomorrow, that it takes off. If we break above this level right here at 100, especially with it being resistance all the way back to the end of last year, look at that, November it hit it, December it hit it, January it hit it, February it hit it before the breakdown. It was just hovering in that 100 level, and then we made it back in May and June. Now we're here again in July. How many times has it hit that 100 level? Multiple times. So imagine if it's able to put some distance there. I think we could see that 115 level in very short order. So that's really an interesting chart. And it's going to be tough to beat that one, I can tell you already, as far as the one that we select for our case study this week. Let's look at one more or so, and then I'll take some questions. Mastercard. Actually want to look at Alibaba again too, even though we already have that one for an alert, so not quite as interested in that one as much. But Mastercard, now, dang, I just got done saying it's going to be hard to beat. Well, that looks pretty good too. Let's put the Elliott wave pattern on, see what we have, and we're in corrective mode. So now we go to the zigzags. And starting from, look at that, doji there. Impulse here. This is full of zigzags. So we're up, so the target would be the 161.8. Look at that. Look how many times it found support at that 100% level. So it moved up, didn't quite make it to 138, but came down, tested it, and it's marching to the upside again. Pretty hard to imagine a scenario here where we don't break this and come up here and hit that 161.8% level, which also happens to be a bit of a test of resistance, double top if you want to call it that, where we go up and retest those highs around 350. So that looks pretty good. Let's see what the DMI looks like. And this one hasn't quite given us the signal yet. So here's what I was talking about as far as I set the search to show up a little early. If you set the search for the ADX to be above 20, then you get 25, 30, you've missed it. It's too late. The strongest part of the move is already over. So I set it down here, breaking above 15, because I can put it on the watch list. And then every day when I'm looking at the stocks that are in current alerts, ones that have moved to a watch list for potential consideration moving forward, this would be one of those. Mastercard, because it hasn't triggered yet. And remember, I just went through this whole dissertation of I've seen where this looks great because the ADX is between the two directional indicators already. The positive directional indicator is moving to the upside. All that looks really good. And you can look at this and say, come on, that ADX is going to make it up there. It's going to break above 20. Oh, yeah, well, check this out. See, it went up there and then give you a head fake and then boom, back down. So we've got to let that actually happen and occur so it doesn't move away from the Carmax as the consideration in my mind, but certainly want to keep an eye on this one. So I'm going to make a note right now for next week. I won't write Carmax down yet because I want to look at one more, but Mastercard is on the watch list. And today is the 4th. So, yeah, let's just look at Alibaba breaking out. They clearly see that triangle it's moving out of. CCI looks good. DMI looks pretty reminiscent of LOGI, right? It's just strong. ADX is above 25, hanging in there between the two directional indicators or separation there. It really didn't move down too much with this triangle that occurred. And again, you can clearly see this triangle right here. And there's the breakout. And so the breakout was yesterday, confirmation today. So two pretty good days of movement to the upside there. And it looks like, so here we go again with the whole numbers and the whole tractor beam thing. We're going to get to 290, or we're going to get to 295 or so and not go to 300. 300 is within the tap box area of the extension, so you could easily see Alibaba reach that level. But we already have an alert on that one, so I think we'll select Carmax as our case study consideration for this week. And see if I can keep our strain going. I mean, it's awfully tough if you've been attending these TradeFinder webinars week after week after week, where we've got just an incredible list of winning trades. So I don't know how you not find this to be valuable and that it works. And I wanted to show you this because remember the Henry Stein that was giving us fits before? Well, we talked about this triangle and broke huge to the upside. So we don't have any losers. That was our loser. And that one finally got its act together. I just wanted to share that with you. All right, so we've got a few minutes left. We'll see if there's a few questions that I can answer, and then we'll wrap things up for the evening. Look at MTA. Got a nice gain in it already. Well, I guess so. And that's why I haven't seen this before. Is I look at the $10 level. We actually were talking about this last night. I know there's a lot of people that have been trading these lower dollar stocks, the Robinhood guys and stuff. And there's a lot of people that are trading that have zero experience trading. They've just gotten hooked on it because they're home with nothing else to do with all the quarantine stuff and everything. And I just urge caution, just be careful. Hopefully you've got experience, Brian, and you're not one of those brand new guys to this. But $10 is my cutoff, and the reason for that is by prospectus. You have to, and here's an indication of it. To trade a stock below $5, you're really messing around with the pink sheets and the penny stocks. Once you break above 5 and you move between 5 and 10, you get above $5, then mutual funds, institutions, investment companies, things that are in 401ks, IRAs, things like that. If they're aggressive, if their investment objective is rated as aggressive by the prospectus, they're able to trade those. But once you move above $10 a share, that brings growth stocks in as well, or growth funds in as well. And that's where a ton of money is in growth-oriented mutual funds, investment accounts, etc. So I try to stay, because I'm trading Elliott wave, and this is in a wave 3, and that vertical move just scares the heck out of me. I hope it keeps going vertically for you. I hope you get 3,000% out of it. I'm rooting for you. I'm just saying that vertical move makes me nervous as far as, you know, when they go straight up like that, sometimes that move back down can be pretty straight too. So keep your stops in place. If you're still riding it, I hope it runs all the way up. It may very well go all the way up here before it corrects. Looking at the DMI is starting to get close to nosebleed section 2. So again, when it hits the point where it's saying the strongest part of the move is over, that doesn't mean the entire move is over. But when you see the ADX up at 40, it's where you're like, all right, I'm going to be a little tighter with my stops and be a little pickier, and maybe when I want to take profits and move out of it. So just a note of caution as we're starting to get into the nosebleed area here with that vertical move and the ADX getting up there. Again, it may go all the way up here first. And if it can break above 10 and hold meaningfully, you could see another big run out of it as the growth mutual funds, et cetera, may take a look at it and want to become involved. They can't now. It's got to be, I think it's 3 days, if I remember right, my days as a financial advisor. I think it has to trade above there 3 days before they're allowed to come in, close above it 3 days. That could have changed. That was a long time ago when I was a financial advisor. I've been trading for 25 years, and so that was a couple years before that. Well, 24 years to be exact, but we rounded to 25, 24 and change. But so that, I mean, that rule could have changed since then. But I know the guidelines for prospectus hasn't changed. Yeah, congratulations on catching that, and I hope you make more out of it. Just be aware that we're getting there. Steve asked, do I ever use the range projection tool, which is another tool within ProfitSource and Integrated Investor? I don't. I keep the tap box on, but I utilize the Zigzag tools, et cetera, for the targets. That's what I like to utilize. John, really good question on the NEO trade. Because we talk about this all the time in the volatility strategy with triangles, looking for the second day, the second breakout day, which is a confirmation day or a follow-through day. And the reason for that is it was everything showed up, even though it was a triangle, everything showed up with the confirming indicators as far as they move to the upside. So it was slightly different than what we normally see with the triangle setup. So even though it consolidated, it was still strong. It was still strong in the move. And so that's slightly different than looking for just the consolidating stocks for regular general triangles. I know that I actually thought about that very point. So I'm glad you asked the question so I could clarify it. But it's also important to remember that triangles show up quite often in wave fours that do break to the target. And if the confirming indicators would not have been all in alignment of it looks strong to continue to the upside, wouldn't have done that, would have moved it to the volatility strategy and done one of our normal strangles the way we set them up. So that was the reason, but thanks for asking the question. We're talking about two different things, Steve. The ACM is a triangle. The ACN was what we looked at last week for the directional trade. So ACM is in the volatility strategy as a triangle pattern. ACN is the directional trade that we looked at last week. Netflix. Let's take a look at Netflix. So we had the big spike on earnings, all the movement around the 500 level. Boy, it looks like it's trying to make another run, doesn't it? Look at all these zigzags. I'm going to take the time to label them all now because we're running out of time. Let's see if I can get to a couple more questions. But it just, you know, we had alerts on this. Certainly bears watching with the movement over the last couple of days. The ADX is starting to turn back up. Now, what I like about the ADX, and this happens, this is actually a good chart to talk about this. Quite often when the ADX has a run like this, where it had this run within this wave 5 move here, and then circles back down, if the stock just makes this correction, and here we go with the vertical move. So what we just talked about all night long is why I get nervous with the vertical moves, is they correct stronger. So we had the vertical move, there's a pretty good correction there, came back down, actually testing in the area of the previous wave 3, then that resistance area from June, found out, hit this level here, and then started to move back to the upside. Then we have the ADX starting to curl back up. When we have these corrective moves, a lot of time the ADX doesn't come back to 20. So it comes down and it turns and it goes back up. I like it much better when, if we're going to go through this correction move, let the ADX calm down, get back below 20 again, and then curl back up. We're starting to see good a separation between the two directional indicators. The ADX is curling up. We haven't made it above 20 yet, so it would go on the watch list. Along with Mastercard would be another one that you could put on the watch list. It's not an entry yet, but if that comes in line, it looks pretty interesting. CCI. Were you looking at this as far as a potential strangle, Ray?
I think Ray was actually looking at CCJ there, Rob.
Oh, CCJ. See, eyesight. Thank you. Woo. Well, we came back down to support, didn't we? We had a pretty tight range there, and it blew right through the upper end, where you went sideways for a while. Get those flats. And then broke to the upside. We got a little triangle right here. I'll just do this one this way because it's so small. A little triangle with a huge breakout all the way back down. Now it's holding above 10. Now, this gives me another chance to talk about this $10 thing. If the stock comes back down, there is, based on that rule, note this tells you why it's continued to find support. Every time it comes down to 10, it bounces up and bounces up, because all those mutual funds, whatever, they don't like to trade in and out, right? They usually are in for longer term. It's more the buy and hold type of thing. They're not traders. They're not looking for shorter term moves the way we do. So if they get in, if it qualifies, it's been above 10 long enough that they can buy in, it comes down, they tend to support it at 10. So it comes down because they don't want to sell, and they have to. They may not want to, but let's say it broke 10 and came down to 9 or whatever. They may think that that's fine. You know, in a wave 4 here, that would still be less than a 61% fib retracement, probably less, maybe about 50, but it still would be well within the LA wave rules. But that's too bad. If it stays below 10 long enough, they have to sell. They're forced to, and then they're going to have to take that loss, and they have to make that a realized loss, and they try to avoid that. So when stocks come down to the $10 level, the institutions that are in it, they tend to buy and support it, try to get it to move back to the upside. And if they can get a momentum run out of it, then they'll take some of their extra buying off. That may very well have been what happened on this spike to the downside here, is that could have been some of the people that kept buying every time it hit 10 on this break and moved to the upside here. Some of those may have gotten some of that money back. And maybe they went a little too hard, a little too aggressive, and really took the bottom out of it. I don't know if this was an earnings report or what caused this big down day here, but I really would suspect that there was some selling into this move from people that have supported it back down here. So where they find themselves, right back down here again. What happened today? Boom, and bounced back to the upside. Looking at the DMI, you can't make heads or tails out of that, because with that weird move there, with that big down day, it's screwed up the DMI. It's going to take it a while to give us any sort of a signal. You could take some heart from the CCI that we made it all the way down to minus 100. We'd have liked to have seen it. You would have liked to have seen it come down a little further than that, because you can see these areas here. So it didn't quite make it down to way oversold conditions, but it got in the area. So it's your best chance, if you're in this, is that they come, they support it again. The last thing you want to see is a break of 10, because then they're going to have to, I mean, you can just see it right there, how they're supporting it, and you don't want to see it break below that for too long, or they're forced to sell. So again, the most positive thing I see out of all this is the fact that you're likely to get another one of these bounces. I don't know that we're going back up here again. Maybe it goes up there and it takes off, but you're likely to get at least one of these kind of bounces. And that's what those guys are hoping for. They're hoping to create enough momentum out of it to attract a big momentum move, and that you take off. But so that's that. We'll look at Disney. Yes, Disney, and then we'll wrap things up, so we're getting a little bit long here. Again, apologize when I get to your questions. Come back next week and we'll keep at it. But already run longer than what we promised you anyway. So here's Disney. You're right, it has been consolidating for quite a while, and ADX is starting to tank down, so it's broken below 13 over the last few days. I haven't looked at the consolidating list yet today. We just updated them just before we came on. So when I look at this stuff, I'm looking at it with you live. There's no Monday morning or no setups and all that stuff going on. You're getting the analysis live as I'm looking at it. So hopefully that's informative to you. That one was going to be a really good Elliott wave one. Let's take these lines off and use our triangle tool here. Look at that. Yeah, that looks like it wants to break out again. We did a strangle on Disney before, and it wasn't this move. That would have been nice. Would have been nice to have. I mean, we had a lot of strangles on when the market broke to the downside, which was fantastic. But we didn't have a Disney one on then. The one that we caught was this one here, this triangle right here. And boy, we made a great exit, because look at that. We exited on this breakout and then came right back down and went sideways again. So yeah, it looks that looks good. We'll do some more looking at the options, etc. To see. And I know that didn't they reported earnings after hours today, didn't they? Yeah, they were expected to lose 4 cents and they made 8 cents. I don't know if that's caused any after hours. Yeah, stock's up big after hours, so that's just going to take that away. It's at 124. So, pardon me, we're a day late on that one. Can keep an eye on over the next day or two and see if it gives you a directional trade now. But if the after hours market holds, it's going to be a big move to the upside tomorrow, so you won't be able to do the strangle. It's already broken out. SQ. I also want to talk about SSD. We talked about that last week, I think, and said to look at it. There's no options there. There's just no options. If there are options, there's no open interest involved there. Why? Put that written down. So look at SQ, Square, obviously in the news all the time. You said before earnings are the earnings tomorrow? Oh, it's today? Big after hours jump on that one too? It depends on how far it goes. I mean, that's a great looking chart. Would have been nice to see this triangle right here on the breakout, and then you're saying it's up big after hours on its earnings. It's in a wave 3, but that ADX never triggered for me in the search. And it doesn't mean if you don't see this is the kind of stuff that's for the Neo type of thing, more of a directional move than trading the strangles, because the ADX didn't come back in there. But I guess we'll watch that one and see how far it breaks to the upside on the earnings. Okay, FXI, and then we're done. China has been all over the map, that's for sure. It's nice to see all these gaps getting filled and 40% correction back to an area of support. And obviously with that big move to the downside there, the DMI isn't going to quite give confirmation yet. So you'd be trading just off Elliott wave if you did it, not off my technical trading system where we need these indicators to follow along. The way this jumps up, I mean, by the time the DMI gives you confirmation, we could be all the way back up here at the 3. But you could certainly make a case that we've come back down to a pretty strong area of support right through there. And we're at a pretty good fib level, 38.2% fib level. With all that in mind, I mean, yeah, you could make a case for it to move to the upside. But again, that would be just a pure Elliott wave trade, not the technical system that we've talked about. Thanks for your attention tonight. Sorry I ran long. Look forward to seeing you again next week. Take care, everybody.